All right. Well, I guess, yeah, now it's afternoon. So good afternoon, everybody. Welcome. This is going to be a fairly brief session. We'll be about 20 minutes-ish in length. We want to be respectful of everybody's time. We are recording this because we had a number of people that registered but just couldn't physically, I guess nobody's physical right now, but couldn't actually be here online right now. We do have Andy Davidson as a guest. And really what this is designed to do is Charlie, Emily, and I just came off our national meeting. We do 2 national meetings every year. Our last one was just last week. And what we decided to do as of last year, which is kind of share our findings. Our meetings are not secret. And so yet they're the latest, greatest, everything that's happening within franchising. What's very special is that 3 of us are here in the Pacific Northwest, and we're able to give you the latest, greatest on franchising for not only nationally, but right here in the Pacific Northwest, what's happening. So we got a few topics that we thought that you would like to hear about, but we put this in meeting format. So if Andy or anybody else who joins us has questions, just unmute yourself and ask away. And that's what this is really just designed to be a conversation and just be totally open. I guess I'll be timekeeper to kind of keep us going. But otherwise, that's about it. So we had a few different topics. Emily, do you want to kind of go through the topics of what we wanted, that we thought people would like?
Yeah, we definitely wanted to touch on financing and how the funding landscape, the timeline has changed over the course of the pandemic. Another topic we're going to talk about, obviously, is trends. What have we seen in recent years, this past year specifically, and what do we see kind of coming ahead? And one of the kind of a subset of those trends is, frankly, we're going to talk about burnout. I know. So happy, right? But there's hope on the other side of that burnout, for sure. So shall we start with financing? Because I know that there were some specific questions around financing. Hey, Chick, welcome. Glad you're here. Charlie, do you want to kind of kick off the part, like what your takeaways regarding financing? Oh, Charlie just disappeared.
I think we just lost Charlie.
I'll bet he probably tried to unmute himself and accidentally logged off.
So hey, Chick, real quick, Chick, if you have a question, this is meant to be a conversation. So if you have a question, just unmute yourself and ask away. So we brought up a couple topics that we thought you'd like, but it doesn't mean that's what you want. So if you want to interject or ask a question, ask away.
Great, thank you.
Yeah.
Well, Emily, why don't we start with one of the other topics while Charlie's getting
okay, so while we're waiting for Charlie to join us, let's talk about some of the trends that we're seeing. So prior to COVID, I would say a trend that lasted, what, Blair, maybe a decade, was semi-absentee ownership models. Now, these are franchise brands, business systems, that the part of the system involves having a manager run the daily operations of the business so that the owner can be semi-passive or semi-absentee. Now, this was a really common methodology to get into business ownership and entrepreneurship for anyone who was fully employed. Oftentimes these are professional, salaried individuals that want to create another revenue stream, that are looking to build equity. One of the characteristics, a common characteristic of semi-absentee ownership models, was these were location-based businesses. So a storefront, perhaps a retail location, maybe a location that provides a service. Think about kind of those characteristics as a business where there's a manager on site running the business. Now, this was a huge trend. When the pandemic hit, we saw, obviously, a lot of these businesses had to shut their doors, for the most part temporarily. Unfortunately, there were some small businesses that had to close altogether, but no one could go to these businesses on site. The trend that we're seeing now is kind of a focus back on semi-absentee ownership as things are beginning to reopen. And I think Charlie's called back in. Hey, Charlie, we're just talking about some trends. We'll kick over to financing when you're all settled in. But we're kind of
cool. Sorry about that.
No, all good. I think we've all had some type of technology, something over this past year. So we're starting to see the focus back on semi-absentee ownership. Now, why is that? couple of reasons. Businesses are starting to reopen. Well, we're also seeing that this is a very, very affordable time to get into that type of ownership model. What I mean by that is there are more vacancies, more landlords that are hungry to get tenants in. And one thing I heard from many franchisors is that the tenant improvements that they are able to access for their franchisees, you've got the power of the franchisor coming in to kind of negotiate these improvements. The TIs are, we'll say, more generous than they've ever been in the past. Also, the rates, the borrowing rates are low. Blair, is there anything else you want to add on to this?
Well, I would say, let me step back on the people that we saw, and I would say it's the change in the type of person that we're seeing now purchasing semi-absentee. Because now that we're hopefully coming out of COVID, although where you and I, Emily, where you and I sit, we're about to get slapped on the hand again as of this Friday and everything's shutting back down. But so Emily and I sit in Bend, Oregon and Deschutes County, and the governor was not happy with us over the past couple of weeks. Anyways, so we're seeing a lot of corporate executives who had their jobs, have either been asked to leave their job or left their job, who said, hey, I'm kind of in my, close to 60 years of age. I'm not quite in my retirement years. I don't want to go back to corporate America, but I want something to do. And I want to generate some income, and I want to feel like I'm involved in my community or whatever the case may be. And so they are also looking at semi-absentee, as well as people, like you said, Emily, who are currently in their jobs, doing very well, might be a little bit worried about their job going forward, who say, hey, I want to either diversify my personal financial portfolio, or hey, I want to diversify my income if I'm ever asked to leave my job in the future. Great, I got this business up and running on the side. I can go focus on that.
Yeah, well said. And what I did say is that the trend prior to COVID with semi-absentee businesses is many of these were location-based. One thing that I noticed, and I spoke with, last count was 55 different franchisor representatives, so 55 different brands at least. And one of my takeaways, and I started to create a list because I was hearing the trend, was that there were more semi-absentee ownership models that were in service-based businesses. So we're talking about businesses that are not dependent on a location, that are not Class A, even Class B real estate, sometimes an office, some of these even home-based. But that was something new to me. Usually these service-based businesses required a full-time effort from the owner. And it looks like semi-absentee ownership is now available in more different types of industries, more different types of businesses than at least what I've seen.
Correct.
Yeah.
Now, what I would share with you guys is what we saw last year, literally from, I would say, April till probably March-ish of this year. And it was really emphasized during our national meeting last October, is what we saw a tremendous amount of people buy what we call service-based businesses. Businesses that are, because we're all in our homes. I think every single one of us are sitting in our homes right now. A lot of people spend a lot of money on their homes over the past year. They're trying to make it nicer. They feel that the trend is going to be, hey, more corporations are going to allow people to work out of their homes. So people are saying, hey, if I'm going to do it, I want to make this a true castle that I live in, whether it be my office or my garage or my yard or the paint or whatever the case may be. So we saw a lot of franchises purchased over the past year in home services is what I'll categorize them. But again, we're seeing a little bit shift right now back to semi-absentee.
Yeah, home services was booming. Anything to make your garage, your yard, to make better, more efficient and more comfortable use of your living space was huge. Another trend that I would see was just the use and the level of sophistication in technology.
Absolutely.
I mean, we couldn't, businesses, and I think I joked about this the last time we did this. If I hear the word pivot one more time, I'm going to gouge my eyes out. But businesses and people as a whole, we had to pivot and start getting things done online using technology more than ever, and technology anywhere from digital marketing to apps that book clients 24/7. Technology when it comes to like cleaning. Like I heard that there was at least one home-based service business where when they would come in to provide the service, first they would like defog and sanitize everything, provide the service, the repair, whatnot, and then defog and sterilize everything on their way out. Everything moving back to an app. Some fitness businesses where they started to integrate, they started to rent out their fitness equipment and the equipment that syncs with an Apple Watch. So I was really amazed by the amount of technology and the level of sophistication and the advancements that so many companies were able to incorporate so quickly. Really.
I heard the same thing, Emily.
Yeah.
A lot of franchisors now paperless, using artificial intelligence in stair-step ways, but in ways to increase automation, which potentially increases the profitability of the franchisees, the efficiency of and quality of the franchisors' systems and practices, and just how well they can support their system. And I just one quick add-on comment. I also heard the same from, and the three of us didn't talk with all exactly the same franchisors. So this is representing probably 100 different franchisors, but there was a definite increased interest in home service models. And perhaps part of the reason for that, or maybe not surprisingly, those businesses also had record system sales. I don't mean of new franchise licenses or from a franchise development standpoint. I mean from a system standpoint. The franchisees that were in those franchise models had some of their best years ever. So that, there was a lot of darkness last year, but that's one of the things that was really bright. And of course, I was excited to hear it.
In fact, there was one particular city here in the Pacific Northwest, and I don't know if anybody lives in that city, that all the franchisors said, if we're not there, we desperately want to be there. And if we are there, it's creating record sales for us. And that's Boise, Idaho, believe it or not. So I guess it's just going gangbusters over there.
Yeah, absolutely.
It's a boom.
Yeah. And
actually, I had one other thought, but now I forgot what it was. Shoot, keep going, Emily.
Oh, well,
I remember what it was. Sorry. This is why this is a conversation.
Yeah.
Going back to the technology, and then we'll probably get over to financing. The other thing that was very apparent, and I think we're seeing it time and time again, not only in our own businesses, but in other businesses that we're acquiring and we're seeing in other franchises, is that from an owner's perspective on the technology, it's not really necessary for the owner to be at the business to be able to manage it because of technology. A lot of these businesses from an owner's perspective can be managed from your home, from your laptop, from an iPad, from your phone, whether it's here or down on the beach in Mexico. It could be managed, everything from the marketing to the personnel to keeping track of sales and metrics and KPIs. You don't have to physically be there these days. Obviously, it's nice to check in and make sure the staff knows that you're still alive and you're there and sign checks and whatever. But a lot of it is done online from an owner's perspective.
Yeah. And either the business, it seems like the businesses were already set up that way, or they just, if they hadn't been, they just adapted because we couldn't go anywhere. And they figured out a way to do it if they hadn't already.
Right.
Why
don't we go over to, I'm sorry, go ahead, Emily.
One more trend before we move on to financing is health and wellness. Really solid industry last year. And I think health and wellness, it's kind of tricky because sometimes we might think of a spa type of business, which, yeah, I mean, I think that falls under this category. But I would just deviate a little bit and say anything that has to do with physical health, movement, anything to help people feel young, active, healthy, not just feel, I'm tripping over my words here, so Blair, feel free to jump in. But there's kind of the need-based health and fitness, and then there's kind of the want. And I would say a huge focus on the need-based health, keeping children healthy and active, keeping seniors healthy and active when everyone was stuck in their homes. A lot of businesses started to just provide online classes. I already mentioned leasing out their equipment, Zooming classes, et cetera. So there was I would say some of those businesses that really focused on wellness tended to do really well last year.
And
I heard the same, Emily.
Yeah.
And they expect it because...
I heard the same.
Go ahead, Charlie.
Go ahead.
Okay, I'll go.
Oh no, after you.
I'll go.
You're gonna have to rock, paper, scissors.
I'll go. I mean, we're seeing it even in our parent company of FranNet. Obviously, all of our employees have been working from the home, and it's based in Louisville, Kentucky. And we were kind of getting ready to open up the office, and we were literally petitioned by every single one of our staff members that they do not want to go back to the corporate headquarters. They all want to stay at home.
Wow.
They all want to stay. They felt that they're more effective staying at home. They all want to be at home. They have more freedom. They're happier at home. And we're starting to see this in many other corporations as well. So if that's the case, and going into the future, we're all going to be in our homes. Yes, personal wellness is going to be effective, because look, I can only sit here and stare at you guys on a screen for so long. I want to have some personal interaction. I want to go be physical, be active with people, not only from a mental standpoint, but also from a physical fitness standpoint.
Yeah. And that's actually a really good segue to something. And Charlie, before you educate us on financing, because I know you've got a more in-depth knowledge of financing. Earlier I had mentioned, excuse me, burnout. And what I mean by that, if we're to take a big step back, and this is kind of piggybacking on what Blair had just mentioned, we had a presenter say this, and I've actually seen studies. I shared some on LinkedIn. I've heard from multiple sources that when companies reopen, and those that are going to require their employees to be back in the office, and we're expecting this around September 1st, is there's a lot of sources that say people are just planning to quit. People are just saying like, yeah, I'll work from home, and as soon as you require me to be back on site, I'm out of here. So one of the things that we're focusing, another focus, is home-based businesses. A lot of businesses that hadn't been able to be run from home previously, like Blair had mentioned, you can run these from the beach in Mexico, your home, whatnot. And so we're seeing, or what we're predicting, is another huge focus on businesses that can be run from home. And if we were to have kind of a Venn diagram, if you will, where we had semi-absentee and home-based businesses, I would say for just about the first time, there are actually a few semi-absentee service-based businesses that can be run from home, which is really unusual. And it will be really interesting to see how many people that are just feeling burned out with the job decide to explore this path after saying, hey, I've been really productive working from home for the last 12 to 18 months. Now I'm going to do it for my own business.
Very good.
All right. Financing.
Okay. We're coming up on the 20 minutes, so I'll be brief. But I do have to say first, when it comes to health and fitness, home personal training is a booming category. There's a very exciting franchisor in that space. And assisted stretching has also seen a record year. It's a location-based business, but with everybody at home sitting at their computer, they are so kinked up. The opportunity for stretching is not just aspirational, but definitely a need. So that's something that we could talk about more. But when it comes to funding, You find something that you think's a good fit for you, you want to move forward. How are you going to make it happen? So the big theme, and we heard from 3 different funding strategy groups that FranNet works with nationally, is liquidity. Liquidity is the name of the game when it comes to SBA lending. They are looking very closely at what is your post-closing liquidity going to look like. So that is after you've paid your franchise fee, and of course the franchise fees range from $35,000 to $70,000 for single unit awards, and more if it's a multiple territory award. Plus the liquid injection that you're going to put into the business as part of the loan. Usually the requirement for that's about 25 or 30%. But how much liquidity after you've done that is left over? And what the banks want is 4 to 6 months of overhead expense covered if there is another income source in your household. Let's say a spouse has a job, or you have a job that you're keeping, and this is for a semi-absentee loan. And if there's not that additional income source, then you need 2x of that, more like about a year's worth. So it takes a ton of liquidity these days for a 7A loan to happen. The banks want collateral. The rate right now, prime plus about 2.75. So you're looking at about 6%. And one of the things that hasn't really changed over the last year, but one new thing that we heard was there's a black hole right now between 150,000 and about 2.25 that banks just aren't lending. They're not making those smaller loans. There's what's called an Sba Express Loan, and there's actually one bank that's a couple of our different partners are using them, and that's still available, but it's taking much longer. It's really just a working capital loan. So the bottom line is that if you are investing in a project that has a total investment of, let's say, about $250,000 or less, and you're planning on using lending to fund it, you're probably going to have to look at some different options. Now, the number one option that was presented was home equity line of credits, which these days you can do for 2.5%, maybe 3%. If you have non-retirement equities in a portfolio loans are another terrific option. I would say in my case, not a lot of my clients have sizable non-retirement equity portfolios, but some do. And then the rollover, the ROBS program is, of course, still very much an often used tactic, and with lending being tighter than ever, people are going to that. You would think that lending would have kind of lightened up a little bit, that the SBA has raised their guarantee rate to 90% for the local banks. They've waived to the borrower the guarantee fee. They're paying, this has changed over the last year, but right now until the money runs out, they're covering the first, I think, 3 to 4 months of the payments, all of which can save the borrower money. But gosh, it just takes a long time, and the banks are, they have their normal credit box that they're working within, but they're being really choosy. Another issue that came up is overqualification. So if you were thinking you were going to cash in on kind of these sweeteners that the SBA has put in place for lending, and you have the cash to get your deal done, that can also create a problem. So the bottom line is that everybody's situation is different. It's a dynamic landscape, and we really want to work with everybody on an individual basis to kind of understand the pros and cons of of the different options that are available, which fits best into your situation, so that, you know, if you do find that right match, you know, you can make it happen and in a timely manner. One more other quick thought, and this is also, I've been doing this for 9 years. This is the first time I heard of this particular tactic by a franchisor, but they're offering an option on their royalty. They've modified their royalty, a royalty that's normally 5% and has a $65,000 franchise fee. If you can opt to pay a higher royalty for the first 2 years of the business and waive the franchise fee. So that enables someone to get into that business for less cash. And it, by the way, it's the number one franchise in its category, which is a strongly established vertical. So I thought that was interesting. I'm being in a registration state, a lot of the, you know, I'm kind of licking my chops because I've, you know, there's so much good stuff out there, but at the moment, most of them are in registration and have not yet been approved. So looking for that in the coming weeks. And but it's going to be an exciting year. Thanks for joining us. And that's what I had, unless anybody has any questions.
No, it's pretty good, Charlie. So just a quick summary on the financing, because a couple questions were submitted on the financing. First and foremost, cash. You got the cash, just use your cash. 2 would be HELOC. The next would be a portfolio loan. 4th would be the ROBS. 5th, if I heard it correctly last week, would be the SBA 7A program, which most people just call a small business loan, which is typically about $250,000 or more. And then the last one was the express loans, which are $150,000 or less. Those are the ones that are taking the longest and the most expensive. So we went from cheapest, quickest way to get cash to the hardest, longest way to get cash. That's what it was expressed to us. But even the financing companies who don't make any money from it said, and I'll quote, they would do a HELOC every day of the week and twice on Sunday. And they all said that. And they knew that would hurt their business, but they said that's easily the best way to finance it. There's a couple other questions submitted. And again, feel free to take yourself off mute. Andy, you had one other question I don't think was addressed, and that was, what is the anticipated labor market behaviors given the reopening of the economy, the migration of people, and the desire to work remotely? I think the work remotely part we kind of touched on, Andy, if nod your head if yep. But the migration that we're seeing, I know us here in the Pacific Northwest are really feeling it. Emily and I living here in Bend, Oregon, we're definitely feeling it. If anybody's from Boise, they're really feeling it. Is people from the big cities are moving here because they can work remotely, and or hey, they're tired of the big cities and they want to come live up here in the mountains, which I don't blame them. It's what I did 8 years ago. So that is why we're seeing. That's why so many of the franchisors said, hey, Pacific Northwest is a huge target for them because there's so much growth and so many people moving there. So those are the behaviors and what they're seeing and what was expressed to us. Other questions, you guys? Andy, I think that addressed most of your questions, at least that you wrote in.
Yeah. Thank you. Appreciate it. Yeah,
you bet. Chick, any questions from yourself?
I sure don't. Thank you. Good information. Appreciate it.
Oh, yeah, absolutely. So I think that was kind of the latest, greatest of what we learned last week. It was a hell of a lot of meetings last week, but we get to do it again in the fall. Feel free to reach out again to Emily and I handle Oregon and Idaho, as well as Alaska. Charlie, he handles the state of Washington. So we're kind of your local experts here on business and franchise ownership. There's all kinds of other tools and resources that we have that we can forward to you guys. But feel free to reach out to us anytime to learn more, or if it's something that you seriously want to consider. So thank you, Emily. Thank you, Charlie, for helping us. Roxanne, we always love you. Thanks for joining us. Andy, Chick, I hope it was worth your time. And for all those that will be listening later, hope you enjoyed as well. Thank you, everybody.
Thank you.
Thank you, Blair. Thank you, Emily.
Thank you, everybody.
Thank you, Blair.
Bye.
Emily.
All right.
Charlie.
Bye.
Bye.